Mainstream media keeps telling us the Fed's going to increase rates once, twice, maybe 3 times over the next year or so. I'm saying the next move they're going to make, if they don't do anything, they're going to cut. So you think I'm crazy? Watch this video, and then at the end of this video, let me know if you think I'm onto something or you think I'm completely wacko. So folks, my name is Dan Frio. I'm the host of the Rate Update. My goal each day is to help explain to you guys, if you're a homeowner, home buyer, realtor, loan officer, what's going on with mortgage rates today and what actually makes them move, because that's the most important thing of the day. So without further ado, I like to start my day as a mortgage advisor. I like to start my day with a chart, and this is a bad chart for the day. So if you're new to my channel, all you have to understand is that number right up through there. If it's red, that's not good news. The bigger the number, well, the bigger the adjustment. So we have mortgage rates going up today. The reason why is, well, I'll go over to the economic calendar here in a second, but let's focus 2 things. What does the Fed look at? And that's exactly what mortgage rates look at. So they look at where the inflation numbers are and what the job market looks like. Well, this week we got inflation on the consumer side, the producer side, and then today we got a jobs report. So I'm not going to guess. Let's get over to the news so I can show exactly how these numbers came in. So today we got the continued jobless claims and initial jobless claims. That's our focus on the day. How is the jobs market doing? So if we look at that, we have initial jobless claims. Last reading was 216,000. Economists said, they'll stay there. No, it actually dropped. So initial jobless claims dropped down to 208. Well, I usually focus in on, okay, if you lost your job, that's bad, but hopefully you can get a job back, because if you can't and continued claims keep climbing, that's bad for the economy. So if you look at continued claims, they actually went down quite a bit. Last reading was 1.82 million. They thought it would stay the 1.82. It actually dropped to 1.80. So that's fantastic numbers. So you're looking at this saying, okay, the jobs market's pretty good. Well, let's look at inflation. Well, if you look at yesterday's number, we got producer inflation. If you look at producer inflation month over month, it went from a positive 0.6 to a negative 0.3. So producer inflation went negative. I haven't seen that in a long time. Then you go to consumer inflation. Let's look at that as well. You go down through here, month over month. That's what we want to focus in on, month over month. Where's the inflation now? Kevin Warsh, the new Fed official, he's saying we want data now, not backdated. So this is fresh off the press. CPI, month over month, that's consumer inflation, went from 0.5. They thought it would go down, maybe in the negatives. It did. It went all the way down to negative 0.4. That's almost a 1% adjustment. So now you might be saying, okay, how healthy is the economy at this point? We got some of that news as well today. Let's get over to this. Philly manufacturing, last number was 10. It went to 41. Retail sales control group from 0.8 to 0.5. So retail sales are staying there. Construction and manufacturing is doing well. Jobs market's doing well. And inflation's virtually 0 or negative. You tell me, is the Fed going to increase rates? Let's get over to the market and see how they're faring, because they take this data and they help us understand it and put it in action. Well, if you go over to the stock market, what's the market's doing? Well, we have the Dow Jones at probably another record high. We have the S&P down just a little bit, and the NASDAQ, it is all over the board because it's all technicals, and right now we have what? Semiconductors falling, so it's taking the NASDAQ on the chin. But here's what I want you to look at. If you look at all these things right through here, now you're saying, okay, well, how's the financials of our country? Okay, so let's look at bank earnings that came in this week, because it was a threshold of bank earnings. And if you think banks are doing pretty bad, you see a lot of analysts coming out saying, oh, bank earnings, I don't know what they're going to be. A lot of these banks are doing bad. Let's look at their earnings. So on Tuesday, we had JP Morgan, Goldman Sachs, BAC, I think it's Bank of America, Citibank, Wells Fargo. Let's look at their earnings. You go through here, we start at the top. JP Morgan, earnings per share, up 9%, 10%. You look at Goldman Sachs, earnings per share up 48%. Bank of America up 9, Citibank up 17, Wells Fargo up 14. You see what I mean? So the financials of our country are good. The employment numbers they're staying steady with an unemployment rate at 4.2, and you have inflation right now month over month negative. What's the Fed going to do? Well, let me let you know or advise you what I'm doing or advising my clients. So if you're a client of ours and you come in with a contract right now, we got you pre-approved a month or so ago, and now you finally found that house. What are we doing? We're locking you in right now. The reason being is I don't know what's going to happen in an hour or two, what's going to happen tomorrow. I try to give you my forecasts, but it's all predicated on oil right now. So right now, if you get a contract under agreement, we're locking you in. But you might say, okay, Dan, this is freaking me out. I'm looking to buy maybe in a couple months. I'm in the process of building. What do I do? I think you're going to be okay. Watch two things for me. Watch oil, because oil is going to show you where inflation's going. Inflation goes up, rates are going to go up. Oil goes down, inflation goes down, rates go down. So watch oil and make sure you subscribe to my channel. But if you're buying down the road, I think you're going to be in okay shape. I'm saying the rates are peaked out right now, right at these levels, and we've tested the highs, and it's only downward from here. So I think you're in okay shape. But let's say you married the house and dated the rate. What do you do if you're a homeowner right now? We've got a couple tools for you. So the one we just launched last night, and we're changing the name, is Rate Watch 2.2. Now this thing is on steroids, and then actually you can customize it to trigger anything you want. We're gonna have AI watch this, and we're gonna monitor this behind the scenes. So if you wanna figure out, okay, Dan, when mortgage rates hit this rate, call me, text me, and email me. When my payment drops, call me, text me, email. You're gonna be able to set up a bunch of triggers within there. But now, who am I? Why do I do this? Well, I do this to help educate you guys. And hopefully by the end of it, you're like, okay, Dan, can you help me? Well, folks, yes, I can. I'm licensed in all 50 states as well as Puerto Rico as a mortgage advisor. Here's the cool thing that we do. I made this slogan up a couple of years ago. One application, one credit pool, we can compare your loan with 30, almost 40 different lenders. How? Well, if you're watching this video, you're trying to get, some ideas on what mortgage products might help you. You're also focusing in on rates. I wonder if you could search rates from 30, 40 different lenders with one application, one credit pool. That's what we can do here. And the reason why we do this is you realize all these lenders have different programs. They have different rates. Some might even have a program like a down payment assistance program that might help you out if you're just short on money to buy that first house. So reach out to us. We'd love to help you out. And if you already got some loan estimate quotes, please upload your best quote right into here. It says loan estimate review. I'll have a video out to you within probably an hour or two going over what our fees would be and what our rate would be. And if we can beat that other lender on both of those, hoping to win you as a client. So let's get back to see where the chart is taking us for today. So we're at 25. See this green down here? This might be that reversal I was talking about on filling the gap. So will the gap be filled? Well, join me tomorrow morning and I'll let you know if this gap fills, where rates go, and the economic news we have for tomorrow that's affecting these things over through here. So thanks for watching, folks. God bless. Thanks for watching me today. If you haven't subscribed, please do so over there. If you need help with a mortgage, I'd love to help you out. Otherwise, I'll see you tomorrow morning, same time, same place. See you then. Bye-bye.